Okay, today we'll take a look at a bearish diamond top pattern that is formed for Ethereum and what that means for future price action. We'll also talk a bit about Ethereum's revolutionary London hard fork scheduled for tomorrow. Finally, we'll check in on Bitcoin, which is navigating through a falling wedge pattern. All that and more next. All right, let's start off by looking at Ethereum. As you recall, we're in the middle of this breakout from this big, perfect W pattern, and our ultimate target is up here around $3,100. So we broke out a few days ago, and now we've run into a little bit of resistance up here around this orange trend line, which stretches back all the way back to January. If we zoom in on the hourly chart, you can see that resistance line is right around 2630. And that stretches all the way back here. You can see how this is pretty strong resistance. So it's to be expected that we've run into resistance here as we're in the middle of this breakout towards $3,100. But if we zoom in, you can see we formed this diamond top pattern here. This is the 1 hour chart. I can actually go to the 4 hour chart, be a little bit clearer. So we formed this diamond pattern right here. These can break up or down, but typically they're a reversal pattern. So we broke down from this pattern, and the target is either going to be kind of the start of the pattern, which would be right around here, and we've already met that if that's the case, or another way to look at this is it could be the height of the diamond. Either way, we've met the price target. So we've come down and met the price target for this breakout. So the real question now is, where do we go from here? On the 4 hour, you can see we're still comfortably within the EMA ribbon here, so that's good. But is there a chance this could break down even farther? Now, ultimately, we have pretty strong support here at the neckline for the W pattern. So again, around the $2,400 mark, we've got strong support. So we need to see price supported here around this $2,400 level, and so far it has. But you can also see there's a trend line forming here. So here in the 1 hour, this rising trend line, and you can see we've started to dip below that. Let me get this. So this is slightly worrisome in that we seem to be having some trouble holding this trend line. And what we want to do is we want to see price, especially on the 4 hour, hold above this trend line. If we drop below it, then we really want to watch out for support here at 2,400. If we break the neckline of the W, this $2,400 mark, then we might be looking at further decline below this. But I feel pretty confident that this is a natural consolidation zone here before we break above the resistance around the 2630 mark. It's okay if we sort of consolidate for a while here below this resistance line. And again, don't be too worried unless you see a 4 hour close below this, say, $2,400 mark. Now, having said all this, if you're thinking about a trade, I would not be starting a new long position here for Ethereum until we see definitive proof that we're going to break above this yellow trend line here, because there's still a chance we're going to dip a little bit lower. And I also wouldn't be going short either, because again, we have strong support here at $2,400. So if you are thinking about going long on Ethereum, my recommendation would be to wait until you see some confirmation, especially on the 4 hour chart, that we close above this trend line and we're ready to move back up. But again, ultimately, we need to break this 2630 level before we can start marching higher again towards our ultimate target of $3,100. All right, so the big news for Ethereum is that tomorrow is the scheduled launch of the London hard fork, which includes the EIP 1559 software changes. And this is mainly about restructuring the way fees are handled in Ethereum, as shown in this chart here. So what you can see is previously fees went to miners, and now the fees are being burned. So the old structure was you had block rewards and fees, which both were paid to the miners. And as of the London hard fork with EIP 1559, as you can see in this diagram, there'll be a base fee and a separate optional tip. The base fee is burned, and the tip, if one is applied, is actually paid to the miner. So miners go from a system of fees and block rewards to optional tips and block rewards. The London hard fork won't necessarily make Ethereum gas prices much cheaper, but it should reduce the wild swings in prices that we've typically seen with Ethereum when the network is especially busy. By limiting the increase to 12.5%, you will still see price increases when the network is busy, but you will not see astronomical increases like we've seen before. By far the most important aspect of the London hard fork is the fact that it could be setting the stage for Ethereum to become a deflationary asset in the future, especially once proof of stake is implemented for Ethereum sometime next year, hopefully. As you recall, in this model, transaction fees are actually burned. So by burning those fees, the circulating supply of Ethereum is decreased. And according to Justin Drake's model, his best guess is that when 1,000 ETH are issued per day, up to 6,000 ETH would actually be burned through this process, which would mean a supply chain's drop of 1.6 million ETH per year, which would set a deflationary rate of 1.4%. So the supply of Ethereum would actually be going down each year with EIP 1559 in place and once proof of stake is in place. That should radically increase the value of Ethereum over time. So the fact that the London hard fork could result in Ethereum becoming a deflationary asset here in the future is by far the most important part of this change. Now, switching over to Bitcoin, as you recall, we had this breakout over a week ago from this big descending triangle pattern, which reversed our overall downward trend we were in for a couple months there for Bitcoin. So we broke out really strongly. We had 10 plus days of green candles for Bitcoin. But then we met this line of resistance here around $41,500, this big red line that you can see stretches all the way back to January. So we kind of hit that wall, and we've been sort of correcting off of that ever since. So the real question is, where do we go from here? Is this just a consolidation period before we move higher? Or is this the sign of a larger trend back down? So let's take a look at the 4-hour chart for Bitcoin to see if we can figure out what's going on here and where we're going to be going. So one thing we can do is we can see a pretty strong trend line set right about like this. So this stretches back to July 20th. And again, this is the 4-hour chart. So you can see we had this pretty strong upper trend line, rising trend line. And we broke it on August 1st, and we've been in a downtrend ever since. So the real question is, okay, well, how far is this going to fall? Theoretically, we could fall all the way down here, but I don't think that's likely. I think the more likely bottom for this would be right around here, right around this $36,800 mark. So we've got a lot of support here. So I would say this is probably the bottom for this downtrend. Not a sure thing, of course. It could fall further, but my theory here is we're just consolidating here again until we can break above this resistance line and ultimately take us back up to our price target, which is around $51,000 here. So what I'd be looking for right now is a reversal of this downward trend. And so what we can do is we can set a new trend line here, like so. So again, we broke out of this rising trend line. We're now in a falling trend line, and this is some sort of falling wedge here. So if I go like this, you can see we're in a falling wedge pattern right now. This is a bullish pattern, so we're just really waiting for this to break back up, and that'd be potentially a good buying zone as well. So if you can see it close on the 4-hourly chart with some sort of volume above this trend line, that might be a good time to get back in on Bitcoin if you're not in right now. But keep in mind we still have this resistance line here, and even if we break out here, we could still keep bumping up against this for a while. If we stay in this falling wedge, I'd be worried if we break below this $36,800 mark, because again, that would indicate that we might have farther to fall, maybe down to this $34,700 level would be the next zone down here. But again, I'm looking for this to reverse itself before we get to 36,800, and at the very least, make another run up here. Whether we break through or not is TBD. If not, we might just consolidate some more. So overall, watch this falling wedge pattern for Bitcoin. Look for a breakout to the positive, or look for a breakout below this horizontal line here around 36,800. We don't want to see a close below that. If we do see a close before that, I think we're going to potentially fall all the way back down to 34,700. So those are the two things to look for. If you're not in on Bitcoin, I'd be sitting on the sidelines right now waiting to see which direction we're going to go. And keep in mind, ultimately, this is what we're looking for. We're looking for this pattern to complete all the way up here around 51K. Because if we put in the EMA ribbon, you can see on the daily chart, we're still well above the EMA ribbon, and it's positive now too. So this is healthy consolidation here. This does not look bad at all in my mind. That's why I'm really not worried about it falling below this $36,800 level right now. We'll be concerned if that does happen, but this looks very healthy, and I just expect more consolidation before we break this $41,500 level for Bitcoin. That'll do it for today. If you found value in this video, please like it, subscribe, get notifications. Until tomorrow.